Welcome to the Dad's Doomsday Guide, everybody. Today we have Brian Feroldi on the show. He's an investor and writer, currently providing insights for the Motley Fool, which, if you don't know, provides a variety of solutions to improve your financial life, including your investment portfolio, personal finances, and so on. Brian, thank you so much for coming on. I really appreciate it.
Pleasure to be here, Scott.
I guess for people who don't know who you are, aren't familiar with you, kind of how did you come up in investing? How did you get going writing for Motley Fool? Kind of what's your background?
Sure. I graduated from college in 2004, and I was a business major with a focus on healthcare, but I didn't know what I wanted to do. Like so many people. In fact, I've always been jealous of people that are in college for a major that they actually want to know. It's like, how did you figure that out already? So when I graduated college, I got a job through a family friend, mostly for a startup medical device company that just so happened to work out really well. But I didn't know what I was interested in or wanted to do. That's kind of something that you just have to discover on your own through working. And you're just like, I hate that, or I really like that. After I graduated, my father gave me a book called Rich Dad, Poor Dad by Robert Kiyosaki. I don't know if you're familiar with that, but it's a book that for the first time in my life I ever read, and it convinced me that anybody could become wealthy. Like I always grew up knowing that there were wealthy people and they did something, but like the idea that everybody is in business for themselves. Everybody is a small business owner, even if you work for somebody else, and you can take charge of your financial future, and there are huge benefits to doing so. The number one reason to do so is financial freedom. Once you have enough capital, nobody's your boss. You control your schedule. So that just tremendously sang to me. Like as soon as I heard the concept, I was just like, I'm in. Like I want this now more than anything. So from 2004, over the next couple of years, I just read voraciously every book on money, real estate, personal finance that I could just possibly get my hands on. That eventually led me to read a book by the Motley Fool called the Motley Fool Investment Guide. I absolutely loved it. I got on their website. I started buying and selling stocks on my own with terrible results in the beginning because I knew absolutely nothing. But I just loved everything about investing, just like everything. It was just like, I was like, this is who I am. I am just an investor. Like, this is what I do in my free time. I like research companies in my free time. So 5 years ago, because I'd been so active on the Motley Fool's discussion boards and I'd been to the headquarters and stuff like that, I got afforded the opportunity to become a writer for them. And I made the switch, and that's what I've been doing ever since.
Nice. And kind of opened up a question for me, and it maybe kind of gets into the kind of the next thing is, because I follow you on Twitter, and I urge people who don't to do so, because you do offer a lot of financial advice and a lot of things where you're kind of taking from really great investors historically and kind of like filtering through stuff and trying to give what's applicable to people today. And I guess financial wellness, and you talk about being financially independent and not having to be reliant on other people to make money. You have a great thread on Twitter about it, kind of where you cover like mindset, career, personal finances, and then to investing. You know, I would urge people to go and actually read it versus you having to go through it all, because it's a pretty dense topic. But kind of in a nutshell, how do you break that apart? Kind of what is like the key to each one of those steps? And kind of what you were talking about there is, can anybody be an investor? Because someone like you who's really interested in it, you live and breathe it. If someone doesn't, should they stay away, or can you get burnt pretty bad, or kind of what's your take on all this?
Yeah. So in general, when people kind of come in contact with me, it's typically through the Motley Fool, and it's typically because of my love and passion for investing. And specifically, I love buying and selling individual stocks. That's just like where my passion is. However, I am a firm believer, despite my absolute love of investing, that investing is just a tiny portion of what matters in somebody's financial life. In fact, I am a firm believer that personal finances are 100 times more important than learning about investing. So when I came up with a mission statement for myself, which is something I'm sure many people are scoffing at, the idea of a personal mission statement, by the way, because I used to scoff at the very idea. But I thought long and hard about what my career mission is. And I came away with, my mission is to spread financial wellness. And the word wellness, I think, is so all-encompassing of everything related to finances. So again, people find me and they really want to know, what stock do I like? But what I really want people to learn is how to think about their entire financial life. I want you to develop a long-term mindset. That's just like critically important in so many aspects of life, but especially financially. I want you to think about your career and really have a long-term plan for yourself to not only make money, but to enjoy it along the way. I'm a big believer in developing a side hustle, having a second or third or fourth or fifth income coming in, because you can lose your job at any time for any reason. Sometimes your fault, sometimes not your fault. And if you don't have a second or third or fourth income to rely on to get you through those hard periods, your life can go from great to disaster overnight. So you just need to, that's to me what financial wellness is. I mean, I know that you and the people that have in the show are dads. Let me just ask this question. Do you have a will?
No.
You think you should?
I actually just recently got life insurance, and for the longest time, and what sparked that was being a dad, having my third kid. I was like, I probably should do that. But now the will thing comes up too. Yeah. And you're just like, all these things you don't handle. And you kind of like, I think as a young kid, I pushed off like, oh, that's what old people do. That's not what I do. Or I don't have any assets. But then suddenly you wake up and you kind of have collected all these things and you're like, oh shoot, I should probably do this.
Totally. And to me, that's what financial wellness is. It's really thinking holistically about your entire life, about your income, and protecting what's important to you. And 90% of people I ask that question to, do you have a will? The answer is no, right? And it's not because people haven't heard of it or they don't think it's important. Everyone has heard of it. Everyone knows, oh, I should do that. But it's one of those things that there's no reminder in your daily life that you should do this. So my goal is to make things like that are infinitely delayable, urgent.
That's awesome. So going off that, what do you feel is like the number one derailer when you talk about mindset and all these different things? If you can boil it down to what people do, is it kind of a self-sabotage? Is it, short-term thinking? Do people like just think want it now? Because I'm guilty of it too. Recently, this last February, I lost my dad. He passed away at 64. And, people always talk about kind of long-term planning. And then there's a streak of me in the inside, to be honest. It's like, oh, I should do things now, live in the moment. And, kind of have this balance of between like family, doing fun things, maybe going on vacations, like saving money, maybe being stupid and getting into debt. What do you feel like is the biggest number one derailer? Is it kind of like, is it mindset kind of where you start off in terms of like how you're thinking about how you should save and how you should build wealth? Is it too much of a gambling mentality with some people in terms of like, I need to get it now?
Totally depends on the person.
Yeah.
And there are so many ways to go wrong financially. Just like there's so many ways to go wrong with your health.
Yeah.
Right? You can accidentally become obese.
Yeah.
Nobody sets out to become obese.
Yeah.
It's something that you can fall into through lifestyle. Money works the same way. You can accidentally, through not paying attention, have a mountain of debt and no cash.
Yeah.
And you can just make your life incredibly fragile financially. And there's numerous reasons for that. I think the biggest is that we're just not taught about this stuff.
Yeah.
Not only the fact that just the idea that money is taboo. That's weird.
Yeah.
when you back up, you're like, wait, what? We're not supposed to talk about money? This thing that impacts every single aspect of my life?
Yeah.
I'm just supposed to automatically know how it works, know how to think about it with no training at all.
Isn't that weird? Because like in school, like I was thinking about this the other day with my wife. I was like, I learned all this stuff, that I have no clue about anymore. I don't retain, like, I know chemistry and science are certain things that are very important to get a foundation, but there's certain things like electrons and I don't know. I don't care. I use that nil in my life, but I don't remember any financial advice, anything about how to manage money or investing, any courses like that, where it was like kind of beat into you, like this is how you gain independence. None of that. I don't remember any of that.
Yeah, totally. So I think that is one massive problem. And again, why I think my mission to spread financial wellness, I have unlimited opportunity to do so. But yeah, so that's one reason is we're just not taught about this stuff. To your point, I remember calculus 2 and trigonometry. I don't do a lot of calculus 2 in my real life, but I don't ever remember getting a class on entrepreneurship or taxes or life insurance or negotiation. Like those things are super valuable, but we're just not trained on them.
Why do you think that is? Why do you think that's kind of a big misstep in education?
That's a great question that I don't have a super firm answer to. I did recently learn that the reason that we are taught trigonometry and calculus 2, those changes were made to the school education board based on the space race, because we needed to produce many more engineers to compete with the Russians in the 1950s.
That's a good reason.
So that's why we learn advanced math in high school. It has nothing to do with the real world. It has to do with that. But it just shows you how pervasive, hard to change the school system is. But the great news is that, especially today, it's never been easier to educate yourself.
Mm-hmm.
Never. If you have Wi-Fi, you can learn anything.
Yeah.
Anything. Like to a PhD level. If you are willing to educate yourself. The tricky part is you have to have the interest,
mm-hmm.
and then you have to find the right sources to actually educate yourself correctly. So it's just a sad thing that learning about the ins and outs and the most important things about how to be good with money is something that we require people to seek out on their own, or just assume that you're gonna learn how to do this at home, when your parents might have no clue, or just about, because they themselves weren't taught. So yeah, there's a massive educational deficit in this country, but really worldwide, about money education.
Yeah, I remember my mom teaching me how to balance a checkbook. I still remember that. And she still does to this day. And I'm just like, I just can't do it with all the digital and then all the bank accounts and on my phone. I'm just like, I'm not balancing the checkbook. But yeah, I don't remember ever seeing that. And I'm sure they did, like some word problems, but it makes total sense that I think probably they're worried about people slipping through the cracks and not ever getting an interest in some of these things, people that would be great at them. So then we all have to suffer through these courses. Now, in terms of side hustles, I've heard a lot of different, I think was a speaker. Was it Naval? Is that his name? He was on Rogan a while back, and they were talking about side hustles and kind of, do you identify kind of with technology moving and kind of how fast this is, certain sectors that people should kind of look into in terms of getting a side hustle, in terms of generating a passive income versus, you could kind of break your back all day long working, but when you go home, you're not earning money when you go to bed at night. What do you kind of, through your research and studying, kind of what areas do you find to be the best at generating where you can go home and put your head on the pillow and you're still making money? Is it investing, or is it, like coding, or kind of where do you see things heading with the economy? I know it's kind of you don't have a crystal ball, but kind of what have you seen?
Totally depends on you, mm-hmm. and just what kind of thing you're interested in. My personal choice has been, I love investing. Mm-hmm. Like I love specifically stock market investing. That's just where I like to spend my time. Like mm-hmm. It's just something that I deeply enjoy. Plenty of people don't. Like, it's just like the idea of talking about the stock market is just like, like, no, thank you, which I completely understand. But you have to find a way to own things that are assets if you want to take care of your financial future. Mm-hmm. Some people do it through the stock market. Other people do it by building businesses from scratch. Other people do it through real estate. You can do it by even owning like boring bonds and anything that you can buy that appreciates or produces income is something that you need to invest some of your time into. To your point there, there are an almost infinite amount of side hustles that you could take on. I don't pretend to be an expert in any of them, but even if you have like little kids, you can teach them, go mow your neighbor's lawns, go pick up after their dog. I know someone that has a full-time living just going around walking dogs and picking up after them in the yards. Like,
surprisingly,
how great of a side hustle is that if you love dogs? Like, you're getting paid to take your neighbor's dogs for walks. That sounds pretty good to me. So there's just an infinite amount of side hustles that you can take on. And thanks to sites like Fiverr and Upwork, if you have any sort of media skills or internet skills or writing skills or social media skills, there are so many ways to monetize your talents. So what you do, I don't really care. I just care that you explore something, especially if you are a one-income household, and that one income is in an industry that is in decline.
This is a very light question. Is the stock market rigged? And the reason I asked it like that is because when I was a kid, I remember adults, I don't know who it was, but it got into my head that you couldn't make money in the stock market. And I think they were leaning more toward like picking stocks versus like an ETF or a 401k. And that the reason for that is it's manipulated, right? People are kind of these big kind of fat cats are moving the money around, and kind of like the news things are moving as the news is coming out, and you're kind of chasing the tails of stuff. Is there any validity at all to that? Or is that more if you're going to be trying to trade and try to time the market, that's where you're going to get screwed? And I don't know, because I soon came out of that and I'm like, that was totally bad advice, because it kept me out of the stock market for a long time. And I thought like this was like some kind of game that I couldn't play. Like I didn't have the knowledge. And granted, it's become a lot easier because of things like Robinhood. You can open up your phone. You don't need to pay anybody. You know what I mean? You can just buy and sell as you want. How do you feel about that?
In times past, I would say that, quote unquote, the market was rigged. And I put that in extreme air quotes. And the reason that I say that is prior to Regulation FD, which I think came out in the year 1999 or 2000 or something like that, it was legal for management teams to provide information to some investors, but not others.
Oh,
so it wasn't required that they release all information to all investors at the same time. You could be a hedge fund manager or mutual fund manager with millions or billions of dollars, and you would get information prior to it being released to the public. That is no longer legal. And even things like today we take for granted, like if I want to go and listen in on, say, Starbucks's annual quarterly conference call with investors, I can do that. 20 years ago, I couldn't do that. Like that was a private call that only some investors got to access to. So I would say, if you want to look at it from that angle, sure, the market was quote unquote rigged, and now that it's not. But whenever I hear that, investing can be as easy or as complicated as you want it to be. If you just want to benefit from the long-term prosperity of the stock market, you can just buy index funds. You can just own everything. Every single stock that's out there. No thinking, no homework. You have no knowledge at all. All you need to know is that continuously buy into the index fund every time you get a paycheck. And there are so many ways to make that process automatic. And then just don't even look at it. Don't even look at it. And by the time you retire, if you look, I can guarantee you'll be happy with the results. There has never been a 20-year period in American history where the stock market did not produce a positive real return.
Wow.
Never. 20 years. Now, 1 year? Absolutely. 3 years? Absolutely. 5 years? Absolutely. Even 10 years? Absolutely. You can produce a negative real return. But over long periods of time, the best place to have your money historically has been in the stock market. And the reason for that is when you are putting your money into the market, you are buying into ownership of the most profitable, high-quality companies on earth. You are putting together the talent of the highest talent people in existence who go to work every day to make that corporation more profitable. You are owning the labor of the United States of America and really the world at this point.
Mm-hmm.
So over long periods of time, that's what happened. And keep in mind, the United States history has included civil wars, presidential assassinations, terrorist attacks, pandemics, the Great Depression. I mean, a lot of bad stuff has happened.
Yeah.
And yet the stock market relentlessly marches higher over time because humans are just very good at making their lives better societally over time.
Mm-hmm. And for you personally, and I've seen your kind of breakdown about how you choose a company, kind of what scores you give them, how you break that down. Can you give people kind of a rough idea about when you find a company? I guess, how do you find companies to begin with? Because I start looking and you always want to find that one that's going to blow up and be an Amazon, but like there's just a sea of tickers everywhere. And you're like, God, like if you're interested in a sector, do you kind of narrow it down that way? And then you kind of do you just start picking or do you kind of go off what you hear about them first? I mean, how do you filter it down to a reasonable amount for you to check out? And then once you start grading the company, kind of how do you go about doing that?
Yeah. So importantly, when it comes to investing, I want everyone to know that I failed miserably in the beginning. I knew absolutely nothing in the beginning. But when you actually go out and take money and put it on the line and buy a stock, boy, does that accelerate learning.
Yeah.
It really does.
Yeah.
So the process that I have built for myself has just simply been refined over more than a decade now of trial and error. Mm-hmm. To your point, there are 6,000 plus stocks that you could buy at any given time. How on earth do you narrow that down? So first, I want to say the real answer is that I was a paid subscriber to the Motley Fool. Mm. More than 10 years ago. They have this wonderful service called Stock Advisor. It costs like $100 per year, less than Netflix.
That's what I do now, actually.
Yeah, and they give you multiple stock picks, 2 stock picks per month. They give you tools to connect with other investors, to ask questions, and they give you all their past history and everything like that. The education that you get alone, even if you never bought a single stock, is phenomenal. Mm-hmm. Just phenomenal. But that is a pre-screened group of companies that come my way. And right now, the Motley Fool has multiple services, and I get access to all of them. So I have a fire hose of ideas that are coming at me at any given time, and they're all, if you read about them, they're all good ideas. Yeah. Like they literally are. So how do you determine what is best? Because if you're just reading about a company, every company sounds enticing. Every company, any management team worth their salt, especially if you don't know much in the beginning, can convince you, wow, this is it. This is the next 100 bagger from here. So a few years ago, I set out and just to document my process and kind of systematize it as much as possible. So I just started by writing out a list. What attributes in businesses do I find most appealing? Mm-hmm. Like, what are the things in businesses that I want that I really appreciate? All right, let's see if you can answer these yes or no questions. Do you think it's good to have lots of cash or not much cash if you're a company?
Lots of cash.
Yes, me too. So I want a company with a very strong balance sheet. Lots of cash, no debt. That's ideal. Do you think it's good to have earnings, aka net income, aka be profitable?
Yeah.
Yes, me too. I think that being profitable is good. I think that having a high, what's called returns on capital, I think that's a good thing. Mm-hmm. I think that having a competitive advantage for yourself, this company can do something that its competitors can't, or it has some attribute that its competitors can't mimic. Something like there would be like, me and you, we want to start a social network. How do you do that? Mm-hmm. How do you possibly convince people to join our social network when Facebook exists, Instagram exists, Snapchat exists? How do you get over that chicken and the egg problem of people want to be on a social network because their friends are on a social network, right? Well, guess what? Facebook's already done that. They've already knocked that out.
Yeah.
People join Facebook or Instagram or WhatsApp or TikTok because their friends are on it. Mm-hmm. So that's kind of an unbeatable competitive advantage once you have that. Or there's brand. Like we wanted to make a smartphone and compete with Apple. Good luck. Good luck.
Yeah.
So you look for companies that have some inherent capability that makes consumers choose them over the competition time and time again, and they reliably do so. Then I like things like kind of a funny word, but it's called optionality, which is the ability to have multiple futures. The best example of this is Amazon. Remember what Amazon sold in the beginning?
Books.
What's it sell today?
Everything.
Correct. They went from we are Earth's biggest bookstore to also selling CDs and DVDs. And then we're also selling home goods. And then we're also selling electronics. And then we're also selling, and we're also selling, and we're also selling, et cetera, et cetera, et cetera. They had the ability to scale up their operations and offer anything. Like to the point today that they have a massive number of products that they sell. And they also, from a standing start, now have this thing called Amazon Web Services, where you can build your company around their infrastructure. That's great. They also, from the beginning, like Prime, Amazon Prime, that didn't exist 15 years ago. Now, how many people are paying Prime members?
Yeah. So
could you have foreseen any of that if you were buying Earth's biggest bookstore in 2007? No.
Not, yeah.
So that's called optionality. That's the ability of a company to roll out new products and new services to open up new revenue opportunities for yourself. And then I want the founder to be running the company. I want great employee reviews. I want revenue to be recurring. I want the stock to have already beaten the market, et cetera, et cetera, et cetera. So it's just, I made an enormous list of every business attribute that I find appealing. I made another list of every business attribute that I don't find appealing. And then I created a rating system where I can take any company from scratch and go top to bottom on my checklist, and it spits out a score for me on the bottom that shows me how high quality I think this company is. And then it's based off of that quality system that I determined whether or not it should enter my portfolio.
And what is your, I guess, success rate based off of, I'm sure you've seen kind of a trend in terms of, if it's over this score, it tends to produce these kind of returns, or is it kind of, I don't know. I would imagine there's an element of luck to finding the next Amazon, but in kind of on average, do you see kind of a threshold to where it's like, okay, I can trust this is going to be pretty much a certain thing, or is it never?
So I don't care how good of an investor you are. There's no such thing as a certain thing. When it comes to investing and stock picking, one of the most useful studies I've ever seen is the study that JP Morgan did about 5 years ago. And they went and they looked back at 3,000 plus stocks over a 30-year period. And they said, what percentage of companies beat the market? Produce a higher return for shareholders than the overall market. Now, if you know nothing, like I did, I would have guessed half. That like half beat it, half don't, would be my guess. The actual answer is 36%. So if you are just randomly picking stocks, you have a 1 in 3 chance, roughly, of finding a company that beats the market.
Wow.
So it's worse than a coin flip.
Yeah.
And a company that goes on to produce the majority of the returns of the index, only about 7% of companies are mega winners, are multi investors. So once they learned that, it was just so eye-opening to see, these are the odds.
Yeah.
I didn't know the odds ahead of time. So my system is designed to increase the odds that I find a stock that beats the market and decrease the odds that I am going to buy a stock that loses me a tremendous amount of money. I don't care what system you have. Nothing is perfect.
Yeah.
But I just know ahead of time that my system, if it's performing well, increases my odds of success, it decreases my odds of dis-success. And if I consistently apply this over time, I'll beat the market.
Have you noticed a percentage at all, like a year to date or anything? Do you keep track of that kind of thing to see if you're beating the market and by how much?
Oh, yes. Yeah. I track my performance, and I typically post monthly to Twitter about my year to date year-to-date results as well as year-to-date results are random. Mm-hmm. So don't put too much into that. And 2020 has been such a weird year. I'm just so weird. So it's the most abnormal market condition I've ever seen in my 15 years of investing. And that includes 2008. Yeah. So 2020 has been an absurdly strange year. I can tell you that year to date, my entire portfolio is up over 80%, which is just like way ahead of the market. But again, super abnormal year. But what happens in any given year is random. Mm-hmm. So I don't put like a huge amount of stock into any given year performance. What I'm trying to do is beat the market over rolling 5-year periods. Okay. Over a 5-year period, you can determine that your system is working or your system is failing. Any shorter time than that, it's really hard to attribute it to anything more than just luck. Yeah. So since the furthest back data that I have is 2013, and since 2013, I have vastly outperformed the market. So that's what I'm looking at.
Okay. Was it Lynch who said that about basically if you do any kind of homework at all, the odds of you succeeding are much greater than if you're just like, hey, I shop there. That sounds good.
Yeah, that's one of Lynch's big principles is buy what you know. If you like something as a consumer, mm-hmm. and if you know that product from a consumer perspective, the chances are pretty good that you found at least an interesting investment idea, something that you should investigate for yourself.
Well, that's probably a good, because like you said, you're part of the Fool, so you get kind of a lot of information about what companies you can kind of look at. But for say someone who doesn't do that, then you probably want to go off of like personal experience. Oh, I shop there, or I like this, or I like that, and that's how you kind of start filtering through companies to check out.
Totally. Yeah. I mean, just you're in the movie editing business, right? Mm. Could you be instructive about the differences between, say, Adobe and Avid?
Oh yeah, and I actually own Adobe because I was just like, there's just like a monster. Like,
yes, Adobe is an incredible company, super high quality company. But yeah, so even in everyone here that has some sort of career, they are exposed to companies that they might not have seen that consumers are not exposed to. In my former job, the customer relationship management tool that we use is Salesforce.com. Mm-hmm. If you've never heard of that company, it's been phenomenally successful. Yeah. And I remember looking at that stock in 2005 and being like, wow, I should buy this thing. And then I said, it's too expensive. And it's up about 30 times in value since then.
That's probably one of the downsides of being so into it and looking at so many different companies. You probably see that all the time where you're just like all these different companies that you thought were good, but like, I'll put my money elsewhere. It's like they spring up later and you're like, why didn't I just go for that? That was the next Amazon.
You can't own them all. And the good news is if it's truly the next Amazon, it's impossible to be late.
Yeah, that's a good point.
If you bought Amazon in 2019, you've done well.
Yeah. Now, if someone is unwilling to do what you're talking about, kind of the homework and looking through stuff, and I know the Motley Fool, from what I've read about it, seen about it, it's like good quality. Now, do you recommend that people go out and kind of these stock picking services? I imagine there's some that aren't very good. Is that something that you would recommend if someone's interested in picking stocks, but they don't have the time? They kind of want to be told like, hey, these are some good ones to check out. Or do you just think that's kind of a recipe for disaster if you're just going to start paying people without doing much research and just to stick to an index or something?
If you have no interest in anything we're talking about, if you have no interest in investing, if you have no stock picking, just get your money into a broad-based, boring index fund, dollar cost average, put money in every month, and you'll do great. The odds are very good that you will do great over time. If you are interested in stock picking and starting to do the research on your own, especially in the beginning, still put the majority of your money into index funds, get that compounding going in your favor, and then take a small part of your portfolio and buy a couple of companies that you personally know and like. Like that is the best way to accelerate learning. It's just to get a little bit of skin in the game. And if the majority of your assets or your stock assets are already in broad-based index funds, you don't have to worry about diversification. You could literally buy one company with 5% of your portfolio and not have to worry at all about being too concentrated because the majority of your assets are already into hundreds of companies. Yeah. So that's just a great way to kind of slowly go. And then as your knowledge increases and as your skills increase and you learn about all the things you have to learn about to invest the right way, then you can just add more and more to that over time and build your portfolio out that way. So that's the way that I would recommend to do it. If this sounds like something you're interested in, is just go slow.
Yeah. I had that happen with getting money into it. And it's funny because I think this crash in March has built kind of this whole segment of people who kind of realize it are thinking that stocks kind of just go up, but there's never any kind of like dips involved. But I had a nice lesson.
Wouldn't that be great?
Yeah. If it was always like this, that'd be fantastic. But I had the good lesson with Luck and Coffee, and that happened. And I was just like, oh man, that really hurt. But it made me stop and think like, to pay attention, even if something's recommended, to stop and think, hey, am I comfortable with like, overseas stuff or anything like that in terms of like protecting? And luckily I didn't have that much into it, but that was kind of been my biggest lesson so far. That everything won't just go up just because it was all at a low.
Ask anybody who invested in General Electric 5 years ago how they've done. For those that don't know, that stock's down 70%.
Oh man,
this is General Electric.
Yeah.
Yes, the company founded by Thomas Edison that was been in the Dow Jones Industrial Average for over 100 years. Right? That just shows you if General Electric can go down, anything can.
And how do you feel about trading? I mean, I feel like I know what you're going to say, but trading, kind of investing in IPOs, kind of, and then sometimes I'll watch financial news and people are talking about, kind of being very active with your stocks and kind of like trimming here and adding here and trying to like, read the news and react. Is that kind of a recipe for disaster? Or do you find that if someone's skill level is up to that can be profitable?
I know of no way to predict and make money consistently based on the short term. Mm-hmm. None. I know of none. I don't know anybody that does it consistently well. You can go on any financial news show out there and get people that will tell you that they can do it, or that they say that they can prevent you with convincing data that says you should do blank now, take blank action now. I know of no way to do that consistently well. They might be right or they might be wrong.
Yeah.
The most important thing for me to realize is how or why stocks go up. Do you know the reason that a stock will go up? It's very common to not know this thing.
No, I'll say no.
Okay. The reason that any single stock goes up over the long term is because that company's revenue and profits grow.
Sounds pretty.
That's it.
Yeah.
That's it. If you look at a company like Microsoft, one of the best investments you could have possibly made over the last 30 years. If you look at the company's long-term history, I don't have the numbers in front of me, but this is going to be directionally correct. When they came public, they were making something like $10 million in profits. 10 million, roughly. And that was in the 1980s. It might have even been less than that. Last year, Microsoft made $47.5 billion in profits. They went from 10 million-ish, again, not the exact number, direct to 47 billion. How many times bigger is that? I don't know, 500? They grew their profits 500x over the last 25 years. That is why Microsoft has grown. That's why it's been such a phenomenal investment, because the profits that the business produced that are owned by the shareholders have grown dramatically. That's why any stock grows over the long term. So when I am buying businesses, the only thing that I am focused on is where is the business today and where do I think this business could be in 5 years, in 10 years' time. If the business becomes far more profitable in 5 years or 10 years, you can be darn sure that investors are going to do well. If the profits don't go in the direction you expect, you can be pretty darn sure that investors are not going to do well. So that to me is the only thing that is semi-predictable, is based on what I know today about this company, can I see this product or service being far more important to its consumer base in 5 years and in 10 years? What happens to the stock in the meantime? I have no clue. No clue. Mm-hmm. And I guarantee you, if you ask any market pundit that makes market calls, hey, what's going to happen in 2020? Would any of them said, oh, the market's going to rally by double digits in February. Then we're going to have a global pandemic. And we're going to see the fastest bear market in history. And then we're going to see the biggest market rally of all time, even though the unemployment rate 10%. Yeah. Did you hear that? Did anybody make that call? Of course not. So whenever anybody says anything about what's going to happen in the short term or makes any sort of call about buy this stock, trade this stock, blah, it's all noise, in my opinion. All of it.
Does the price deter you? Because like, especially what's happened lately with kind of things bottoming out, and you said like everything just kind of skyrocketing. Like Tesla's a good example, right? This just the price of the stock has gone through the roof. They've gone under stock splits and like it just keeps going. Do you recommend people, and do you personally find yourself hesitant to keep kind of like buying into these as they make these runs? Or do you kind of hold back for a second, kind of wait for a dip, not trying to time it, but you're just kind of like, man, this stuff is really hot. I don't know if this is the best time to invest. I mean, I feel like myself, I have hesitancy as I see these things kind of going. I'm like, especially when I got in low in March, I'm just like, oh, this is really painful to like buy it here, because you start really getting concerned with, like you said, the day to day, the price, who knows what's going to happen. Or do you just go, this is a great company, I'm going to keep adding a little bit when I can?
My absolute favorite investing thesis goes like this. This great company is going to stay great for a long time. That's what I'm trying to find. Mm. This great company is going to stay great for a long time. When I see a company that's stock has dramatically risen since it became public, and over the last, say, 5 years, if it's been longer than that, when I see a company that has outperformed the index, that is actually a tremendously good sign. Mm-hmm. And the most backwards counterintuitive thing that I've learned as an investor is that winners keep on winning and losers keep on losing. That is so hard to embrace because there's nothing else in our life, right? A gallon of milk is $4. You don't say, hey, gallon of milk's now $8. Let's go buy some. Yeah. Right? We are trained as consumers to look for bargains and expect, oh, this stock fell. That's great. This stock's risen. That's bad.
Yeah.
So we have to train ourselves to think exactly the opposite way than we are instinctively want to trade. I can tell you that when I look back at my own personal buys, the best investments I've ever made were at times that the stock was trading at an all-time high. All-time high. Meaning that if I bought it any day prior to that day, it would have been cheaper to do so. One of the companies that I am very interested in, recently took a position in, and I'm very excited about for the long term, is a company called Fiverr. Yeah. The company that does connects freelancers with other people. Fiverr bottomed out at, I don't even know, $20 a share, $15 a share, something like that. When I bought it, it had already risen 800%.
Wow.
I could have bought that exact same thing months before for 1/8 the price.
Yeah.
I bought it at $150. It's currently $200, by the way. It's super short term, so anything could happen from here. But what I said to myself is, I really like the management team. I really like the company. I really like the opportunity. I really like the financials. I really like the potential. I think it has tremendous optionality. It has a diversified customer base. And it's only, at the time, a $5 billion business. If I'm right about Fiverr, if Fiverr does what I think it can do, I could see this company being a $50 billion business in 2030. Like that's, if it works, if I'm right, I could see this company being worth 10 times what it is today.
Jeez.
Therefore, I want to own it.
Buy it.
I don't care what already happened. Yeah. In fact, I'm excited that the stock has already risen because that means that the company's economic engine is working. Mm-hmm. So the question is this a great company so far? Can it stay great for a long time? I think so. We'll see.
Yeah, I feel like talking to you, I'm realizing my psychology is totally screwed up. Like I'm totally embedded in that. Oh God, I got to look for a bargain now. I haven't like.
That would make you human.
It's disastrous because like I feel like as soon as something comes out like on Motley Fool stock pick, or you see some great news about, oh my God, Adobe's doing this or Adobe's doing that, and you see it jump, you go, oh, I missed it. I should have bought it last week. And immediately it's like I'm thinking past tense and not about, hey, is it still going to be going in that good trajectory? And I don't know how I break that besides just.
It's so challenging.
Yeah.
It's by far the most important thing I've learned about investing, and also the hardest. It is so hard to pay more for something that you could have paid less for a week ago or a month ago or a year ago, right?
Yeah.
But again, think about this. If you bought Amazon in 2019, you're pretty happy.
Oh, I remember looking at Tesla, Amazon, and a couple other ones going like, oh my God, that's abhorrent. That's so expensive. And this was back, when it was like way cheaper. And now I'm just like, well, I talk about it with my brother all the time. We should have bought that. Never ending cycle.
You can't play too much woulda, shoulda, coulda.
Yeah.
Because you'll go insane thinking about that. The only thing you can do is focus on, what do I like today? What companies do I like today? And what do I think is going to be more relevant, more profitable in 5 and 10 years? And just know you'll never get it at the exact bottom, period.
Yeah.
Period. Yeah. That's okay. Because if the company truly is the next great company, it's impossible to be late.
That's a good point.
It's impossible to be it's impossible to be late. If it truly is the next Amazon. If you bought Amazon when it was $100 billion company, you're up 15 times. Jeez. You got a 15 bagger. It's up 15x. So the Amazons are unbelievably rare. Unbelievably rare. But if you find them and you buy them and you hold them, you'll do well.
Now, I guess moving kind of to the last part of our conversation, are you worried about, there's so much in the news these days, especially, with like macro investors and stuff about the devaluing of the dollar, inflation, potentially what's coming down the pipe in that regard. Does that concern you at all? Or because of kind of the things you referenced earlier about kind of all the catastrophe that, the world has seen, the country has seen off and on for, 100 years, that it always seems to find its way out of it. Is it ever in the back of your head, like, that kind of stuff coming down the pipe? And if it is, like, what is your kind of plan B if things do go south, or are you pretty much locked into that stock market no matter what?
So again, we've been for the last half hour, we've been focusing on the stock market. Again, I want to reiterate my earlier point, which is that stock picking is a teeny tiny part of financial wellness. And if you have all of your ducks in a row to be financially well, that kind of stuff just doesn't scare you, right? If you have multiple sources of income, if you have a legitimate career path ahead of you, if you have a high savings rate, if you are completely debt-free, if you have a will, if you have life insurance, if you have a paid off everything, if you have a 6-month emergency fund, all of those things are financial wellness. If you have all of that taken care of, volatility, you become immune to it. You just become immune to it. What is it? Oh, if my stock portfolio fell 50%, it would hurt. It would hurt. That would be painful.
Yeah.
I know all the companies I own, every single one of them, I've studied. I am confident in the long-term trajectory in all of them. If I wasn't, I would sell and I would buy something that I was. So that's thing one. But two, because I have taken care of my personal finances, I've set myself up to be able to handle almost anything that can come financially down the road. So if we have inflation, that sucks, but stocks would do okay. In inflation. The best inflation hedge that I know of is to buy businesses that can raise prices.
Yeah.
They're the ones causing the inflation. So that's what it is. And if the value of the US dollar declined significantly, which I understand the risks behind that. And by the way, the inflation rate in the 1970s was double digits. So this is not something that would be new in the United States. I know that I would be equipped to handle it. So if your personal finances are fragile, it's very easy to become scared at what could happen. If your personal finances are robust, or the phrase that we love is anti-fragile, you have the capacity to handle anything.
So
almost anything financial.
Would you recommend then obviously getting your ducks in a row first before investing at all, or
100%?
Okay, so don't.
If you go on my Twitter account, one of the things that I have on there is financial order of operations. It's do this, do this, do this, do this, do this. It's things like diversify your income, pay off all of your high interest credit, all of your high interest debt, build an emergency fund, et cetera, et cetera, et cetera. Investing is step 13. Right? I mean, that's just the order that you do it. If you go straight from, I have credit card debt, but I'm going to start picking stocks. No,
raise my hand.
No. So let me just say, back up, get your ducks in a row.
Yeah.
Because what's the you have to think, okay, what could potentially happen in the future? What happens if March of 2020 happens again? If you get laid off, you can't find work, and you have credit card debt, and you have car debt, and you have a mortgage. Do you have the mental capacity to also deal with declining stock prices?
Yeah. That would be
rough.
That would be rough.
How would you have the mental fortitude to say, Fiverr's going to be fine in 2030? Like, what does that matter? You don't have the capacity mentally withstand all the things that are happening in the real world. So it's important that you get your mindset right and your personal finances right before you do anything with stock picking.
Good advice. What do you feel about Bitcoin, crypto, kind of the digitizing of money, and even kind of governments talking about stable coins now and stuff, like, or central bank stable coins? Like, what do you feel is coming, and do you see a place for Bitcoin as part of a portfolio in the future?
I know a lot about Bitcoin, and I know enough to know that I don't know enough. So I personally do not have a position in Bitcoin. If somebody came to me, and if you want to take a portion of your portfolio and put it into Bitcoin or any of the cryptocurrencies, I fully support that. Truly, I do, because I understand that there is a massive upside potential. You could make the argument it's an inflation hedge and all this kind of stuff. I understand both sides of the argument, but to me, if it's a portion of your portfolio, I see absolutely nothing wrong with that. And if you just want to avoid it altogether, I see absolutely nothing wrong with that. So I don't have, I personally do not own any Bitcoin. I could see myself owning some someday as I continue to educate myself about it. But my problem with Bitcoin, there's no cash flow. There's no profits. What you are 100% betting on is that somebody will pay more for this later based on it becoming the currency of whatever. I mean, could that happen? Yes. Yes, it could. But I have no way to value that. So I don't know if I'll ever buy it. But if somebody else feels differently and they want to put some money into it, I have no problem with that.
If you had to pick, would you pick gold or Bitcoin?
I really don't like gold. So I guess I'm saying Bitcoin.
Why don't you like gold?
It just doesn't make any sense to me.
Really?
Like it's a physical thing. It's shiny. I understand. I understand all the previous things, and I used to be really into the gold and silver space. But same logic. I have a hard time seeing the apocalypse coming, and everyone's saying, "Boy, am I glad I have this rock."
Let me scrape some off for you.
Yeah. But again, so if you want to put a small percentage of your portfolio in gold and silver, if you want to invest in silver and mining companies, go for it. If that's your thing. There's nothing wrong with diversifying your assets and spreading them out. It's just that they are not a portion of my portfolio.
So you'd have to see more, maybe mass adoption first for Bitcoin and see how it has some staying power before, because really when you
I thought Bitcoin was going to die a couple of times already, and it has not. So there is something to being around for 12 years and having the loyal following that it does, especially, and it's a huge boost of credibility when Jack Dorsey, when Square and PayPal are getting into it.
Yeah.
And I could see it. I could really see it becoming something.
Mm-hmm.
But I don't know if I'll ever buy it or not. But I'm not gonna dissuade anybody from doing so.
Okay. Last question, then I just want to do a quick lightning round with you, or you can just give me a brief answer, then that's it. How do you balance family, investing, and kind of like wanting, create memories for your kids and do different things? And that can be done very cheaply. But do you ever feel kind of a pull between, people like financial wealth and investing, and then, hey, I need to take time for family? Or how do you balance those two things?
Well, there's the multiple components to that. There's the time component.
Mm-hmm.
That's I am well aware that my kids are only small once.
Mm-hmm.
I personally volunteer to be their soccer coach, to be their football coach. I volunteer at their school. I'm on the PTO. I want to be around my kids as much as possible while they are still that is still cool.
Yeah,
that is a perishable commodity, and I am well aware of that fact. So I try and be tremendously involved in their lives at this stage of the game. One of my favorite bloggers, one of my favorite money gurus, quote unquote, is a guy named Mr. Money Mustache. I don't know if you're familiar with him. Okay, check out his blog. It's just fantastic, and he, more so than anybody else, said something I thought was so brilliant when it came to money related to experiences. He said, you can spend any amount of money and have a bad time. And you can spend any amount of money and have a great time. And when you think about that, it's true. You can spend thousands of dollars on a vacation and have an awful time. And you can invite friends over and have a campfire in your backyard and have a super memorable night.
Yeah.
So if that's the case, if you accept that premise and saving money as a priority, doesn't it make sense to maximize the number of things that in which you have a great experience, but it costs you nothing?
Mm-hmm.
And doesn't it make sense to minimize the number of experiences that cost you a ton and don't produce a lot of value?
Yeah.
So once you adopt that mindset, you're like, yeah, if I pitched a tent in my friend's backyard, it costs nothing. And I guarantee you we would have fun.
Yeah.
So do things like that.
Yeah.
Do as much of that as you possibly can without depriving yourself. It's a balancing act.
Mm-hmm. Do you ever find yourself having to put your phone down or like shut off electronics these days?
Oh, yeah, I suck at that.
You're at your soccer game. You're just like, wow, look at that.
Yes, I'm addicted to many things on my phone. I'm actually super addicted to chess, playing chess multiple games per day. So there's worse things to be addicted to, but yeah, I am on my phone a lot. Yeah,
it's really difficult. I've tried to start putting it down because I'll just notice, especially with stocks, and even if you're in crypto, it's like 24/7. There is no, it's off. It's just
delete those apps from your phone.
Yeah.
Delete them. They will encourage you to do nothing but look at them, and you have no power over them. So you're just going to be staring at them. When it comes to investing, seeing a stock price every day is bad for you.
Yeah. And it probably make you do some rash decisions too. Like, I'm selling that.
Or if a stock falls 5%, people reach out to me on Twitter. Why is blank down 5% today? And I'm always like, I don't know. I don't care. Is the thesis busted?
Yeah.
It is. If there's news that busts the thesis in Fiverr, I'll care and I'll sell. If it's just the stock price moving down, I don't care.
Last thing, lightning round. You can give me really short answers. I'll put you on the spot here. Best advice you've ever heard?
Wow, that's a deep question.
Could be life, could be financial. It doesn't have to be in a particular area.
Geez, since we're thinking about stocks, I'm just going to go to stocks because I that's a question that I would really spend some deep time thinking about. So I'll say add to winners, not losers.
Good. Sector you're most bullish on over the next decade?
Healthcare.
Most bearish?
Energy. Fossil fuels.
If you could only hold one company the rest of your life, what would it be?
MasterCard.
Oh, really? Do you see a future, and this is kind of, it'd be too short, but in tech, AI, gaming, are you kind of into, I know you're into medicine, but tech as well, is that kind of where you see the two things kind of blossoming the most? I mean, especially since what we've seen over is just like cell phones and the advancement of technology there. Are those not safe bets? Because I know there's companies involved, but are those sectors that you think will do really well in general?
My absolute favorite two sectors to invest in are healthcare and technology. Number three would be fintech, so financial technology.
Okay. Best investment you've made thus far?
Educating myself.
Worst investment?
Using leverage on a quote unquote sure thing. I used a very bullish option position on a pipeline company that did not work out. That was my biggest dollar loss ever.
Do you still occasionally use leverage?
No.
It's just that was the one and only.
I've learned, Warren Buffett has a great quote about leverage. If you're smart, you don't need it. If you're not smart, you shouldn't use it.
And final question, what do you think will happen to the stock market if the U.S. government comes out and confirms there's aliens?
Bullish? New markets to sell into, new consumers.
I just watched another thing last night, and it was talking about this pilot, I think it was 2019, who caught a cell phone, a fighter pilot, of this triangular shape that came out of the water, and that they're saying that it moves hundreds of miles an hour, or hundreds of knots under the water, and it came up out of the air and was doing like crazy stuff. And it's really cool to see this kind of playing out, but I'm really curious, like if you would think if another country had the tech, they would make use of it in terms of like kind of dominance in the skies and in the sea. But it'll be interesting to see how this plays out, because like you're getting legit people recognizing it now, like fighter pilots and people in the Navy this is like a continuing thing. But I don't know. I was thinking about it last night going, I wonder what would happen to the stocks as they come in with like this new energy,
If aliens come and take over the world, the last thing we're going to need to worry about is the stock market.
That's where you're shaving off pieces of gold to the aliens, like, please don't abduct me.
Yeah.
And for anybody who wants to find out more about you, where can they go? How do they look you up? Where can they find your info?
The best way to connect with me is on Twitter. I'm at Brian Feroldi. I also am a regular guest on several Motley Fool podcasts. But best way to connect with me is on Twitter.
Awesome. Well, thank you so much, Brian. I really appreciate it. I hope people found this informative. I know I did. It's nice to be able to sit down with someone who's been doing this a long time and to really start kind of picking their brain about how they approach things, because I feel like that's half the battle, is just getting out of your own way.
100%. Scott, this was a lot of fun.
All right. Thank you, sir.
Thank you for listening. Bye.
You've been listening to the Dad's Doomsday Guide.
So enlightening. I loved it.
Get more episodes and videos at themadmachinists.com.
Superb.